Assalamualaikum. My name is Kalisa Najah binti Muhammad Azamri and my metric number is H204A2869. Now, I will explain Nova's laboratory to pharmacy flywheel. Nova was founded in 1989 and has a GMP certified manufacturing facility in Sepang with a network of over 900 pharmacies and clinics. The flywheel consists of 3 stages: research and clinical testing, manufacturing and compliance, and retail distribution. These stages work together continuously to ensure high-quality products reach customers. This integrated model helps Nova maintain quality control, reduce costs, and strengthen its business performance.
Assalamualaikum, my name is Sarah binti Ismail. My number matrix is H24837. This slide shows the 4 pillars structure integrated matrix from 2021 to 2024. First, profitability decreased from 36.15% to 29.11% by this year, stable as the company is normalizing after the pandemic. Second, efficiency improved from 1.15 times to 1.34 times, showing better inventory management and operational performance. Third, liquidity increased from 54.2 million to 68.4 million, indicating stronger working capital and cash position. Finally, the debt to equity ratio remained very low at 0.02 times, which reflects excellent solvency and low financial risk. Overall, the company demonstrates stronger financial integrity with improvement in efficiency, liquidity.
Assalamualaikum, my name is Noala Mesara binti Ahmad Zaki, metric number H2483642. In 2021, we saw a peak from immunity boost demand. Since then, our net profit margin has normalized to 29.11%, which is still industry leading. Return on asset settled at 11.20% and return on equity at 11.95%. Both down slightly from the 2021 surge but stable and healthy. The real story is inventory turnover, up from 1.15 to 1.34. That means faster stock movement, smarter SKU management, and strategic to daily wellness products. So, with headline margin has normalized, the engine underneath is running more efficiency than ever, turning product into cash faster. This show high performance operation.
Let's look at Nova Wellness liquidity profile. As you can see on the left, our net working capital has grown steadily year over year, rising from 44.2 million ringgit Malaysia in 2021 to an estimated 68.4 million ringgit Malaysia for 2024 and 2025. Looking at our key financial metrics on the right, our current ratio is exceptionally strong at 8.42. And our cash ratio has strengthened to 4.12. The strategic takeaway here is clear. We are operating far above the critical 1.0 danger line. This massive cash cushion gives Nova Wellness the financial independence to fully fund our new product pipelines and factory expansions entirely through organic cash flow, without relying on external financing or debt. Moving on to our financial health, the Z-Score barometer clearly demonstrates that Nova Wellness is in an exceptionally strong position. Our Altman Z-Score stands at a stellar 7.42, placing us firmly in the safe zone and well beyond any risk of financial distress. This strength is driven by our ultra-conservative leverage strategy from 2021 to 2025. Our debt-to-equity ratio barely moved, taking from 0.01 to just 0.02. Our debt-to-asset ratio remains negligible, shifting slightly from 2% to 3%. The strategic takeaway here is simple. Nova Wellness is a complete outlier in the pharmaceutical sector. With near zero reliance on debt, our expansion is funded entirely by our own retained earnings. This effectively immunizes us from rising interest rates and gives us massive financial flexibility moving forward.
For revenue projection, we are closing out 2025 with a strong baseline revenue for 47.40 million ringgit. To capture more market share moving into 2026, we are focused on 3 strategies. The first one, we are expand our export footprint to the Thai and Indonesia supplement markets. For the second, we are launch a new product pipeline, which is a sustainable rice tablets and functional food. The last one, we are catering a macroeconomic trends by expanding a chronic disease management product for engaging population. For the back end of this initiative, we are forecasting at 10% growth rates, which will bring our 2026 forecast sales to 52.14 million ringgit. For this, assume constant cost and operating the expense percentage driven by higher capacity utilization at our sub-pump plant, as well as we scale up. So, thank you.
Hello everyone, this represents our revenue to profit waterfall analysis. Our projected revenue is RM 52.14 million after deducting the cost of sale of RM 22.16 million. The company achieved a gross profit of RM 29.98 million when they deduct administrative and operating expenses of RM 11.10 million along with minimal financing costs and tax. As a result, the company is expected to generate a net profit of RM 14.123 million. Overall, the analysis shows that the company is profitable, financially stable and has strong growth potential. Thank you.
Assalamualaikum. My name is Irina Auni binti Abdullah and my matrix number is H24A2804. On this slide shows that Nova Wellness has strong growth potential driven by its high margin brands, solid cash position and rising demand for health and wellness products. This growth is supported by increasing consumer awareness of healthy lifestyle, especially among younger and urban consumers. However, the company also faces challenges such as rising raw material costs, currency fluctuation, and stricter industry regulation, which may impact Nova Wellness profitability. Overall, despite this risk, Nova Wellness remains well positioned for future growth due to its strong financial performance and low reliance on debt.
Assalamualaikum warahmatullahi wabarakatuh. My name is Intan Nur Suhaila binti Johri. My matric number is H24A3313. So now let's moving on to earnings management risk part. This risk comes from the gap between market expectations and operational reality. The company is expected to deliver around 10% annual revenue growth to maintain its premium healthcare valuation. However, as post-pandemic demand stabilizes, profit margins are returning to normal, making sustained growth more difficult. This creates a high-pressure environment for management. Although there is little debt pressure, investors still expect strong growth and high margins. As a result, there is a higher risk of earnings management practices like general staffing or capitalizing routine R&D expenses to meet market expectations.
Assalamualaikum warahmatullahi wabarakatuh. My name is Nordana Hazika binti Zaidi and my matric number is H24A3204. I would like to present about the ethical and transparent reporting issues in Nova Wellness. There are 3 main risks. First, pulling forward revenue, where sales are recorded before products reach customers, making performance look stronger than it really is. Second is hiding expenses, where costs like R&D or maintenance are capitalized instead of being properly recorded, which inflates profit. Third is product integrity, where products may not fully meet label claims, which can lead to regulatory issues and harm the company's reputation. These issues can reduce clinical trust and affect long-term valuation. Therefore, transparent reporting is important to maintain trust among clinicians and investors and supports UN SDG 3 on good health and well-being. Thank you.
Assalamualaikum. My name is Nur Fazira binti Muhammad Razi. My matric number is H24A2851. Today I'm sharing an executive summary of Nova Wellness Group Berhad. In short, they are structurally elite pharmaceutical entity with an impeccable solvency profile and a powerful self-funding growth engine. Here are three key pillars. First, operational triumphs. Their laboratory to pharmacy model is world-class, delivering exceptional 29% net margins. Second, structural vulnerabilities. The main challenge is market concentration, making geographic expansion into the Asian region essential. Third, the ethical mandate. They maintain non-negotiable transparency in clinical trials and R&D, ensuring their valuation is backed by scientific reality. Ultimately, Nova combines strong financial stability with a solid commitment to ethical scientific growth.